Hey everybody, I'm Logan Alec. I'm a CPA. I own Choice Tax Relief. And on this channel, I talk a lot about what to do if you haven't filed your required tax returns for a year or for a number of years. I have a lot of videos, what to do if you haven't filed taxes in 3 years, 5 years, 10 years, how to prepare those back tax returns, how to get your records, how to reconstruct your business expenses. If you were a business owner or 1099 independent contractor, I talk a lot about that stuff. But there is an even more fundamental issue and a fundamental question here that, to my recollection, I have not covered on this channel. And that fundamental question is, Logan, if I didn't even make a lot of money during the year, do I even need to file taxes? How do I know if I actually need to file a tax return or not? That's what I'm going to get into today. I'm going to answer that question today. This question was actually prompted by the question you can see right on screen here from Medical Meme Dealer. Titles his question, failed to pay and file but made less than the standard deduction. I'll read the question here. In 2022, my little brother and I worked selling pest control service for a company as 1099 contracted employees. 1099 employee, that's kind of an oxymoron. He means they were 1099 independent contractors. He didn't file taxes for that year, but I think he made less than the standard deduction. Should he be worried? I hounded him about filing and paying his taxes, and now he's worried the IRS is going to come after him or something. Down below that it says edit. He worked as a W-2 employee briefly for a month or two after and had his taxes withheld automatically. Not sure if that makes a difference. So what I'm first going to do is basically give you the general rules here for who needs to file a tax return and to do that. And then I'm going to apply that to this individual situation. And to do that, I'm actually going to use a really helpful IRS webpage that you can now see on your screen right here. It's irs.gov/individual/check-if-you-need-to-file-a-tax-return. I'm basically going to go through this web page here and explain it piece by piece, just so you know that what I'm saying. I'm not just making up. You're hearing it straight from the horse's mouth. In this case, from the horse, of course, being the Internal Revenue Service. Check if you need to file a tax return. Who must file? Most U.S. citizens or permanent residents who work in the U.S. have to file a tax return. Okay, that makes sense, right? Generally, you need to file if, and this is really broken down nicely in plain English, your gross income is over the filing requirement, you have over $400 in net earnings from self-employment, side jobs, or other independent work, or you had other situations that require you to file. And these are somewhat rare situations, so I'm not going to necessarily get into these. You had wages of $108.28 or more from a church or qualified church-controlled organization that's exempt from employer Social Security mega taxes, blah, blah, blah. I'm not going to get into these. I'm going to get into the basic situations here that covers 99% of people. So let's go back over here. Okay, so what does this mean? You need to file if your gross income is over the filing requirement. Okay, and what does that mean? So you need to basically look down here at this chart. Well, there's actually a few charts. One is if you're dependent on someone else's return. One if you were under 65. One if you're a 65 or older. Let's assume you're under 65 and you're not a dependent on someone else's return. Okay, so for 2023, those are the tax returns that we're filing right now in 2024. Right? If your filing status is single, you need to file a tax return if your gross income was at least $13,850. If you're head of household, $20,800. Married, filing jointly, right? Either 27.7 if both spouses are under 65, 29.2 if one spouse is under the age of 65. Married, filing separately, you have to file a tax return if your gross income was only at least $5, right? That's crazy. Qualifying surviving spouse, same as this. $27,700. And these are just the standard deduction amounts, right, for all these filing status. You can look at the table here if you were 65 or older as well. And these are, again, just the standard deduction amounts, not taking into account the blindness, additional standard deduction for blindness. Now, if you're dependent on someone else's tax return, okay, there's kind of a different standard deduction amount. You got to take it. You have to consider. You have to look at this table over here. If you weren't either age 65 or older or blind, then you must file a return if any of the following apply. Your unearned income was more than $1,250. What's unearned income? I mean, you might think of it as like passive income in a sense, right? Interest, dividends, stuff like that. You must file a return if your earned income was more than $13,850. Okay, what's earned income? Income is income you earn for doing something, right? Running a business, working a job, right? Things like that. Okay, and when it talks about earned income here, this is your net, right? Like if you're self-employed, it's your gross income. Your gross self-employment income less all your business deductions is your net, right? That's considered your earned income. Or if your gross income was more than the larger of 1,250, or your earned income up to 13,450 plus 400, right? So gross income combines unearned income and earned income, right? So there's kind of three calculations you'd have to do if you're a dependent. Not going to spend too much time on there because I figure that most of you are not dependents. But wait, there's more. Remember this little thing up here, right? So that's just talking about your gross income, right? Compared to the standard deduction is the first bullet point here. But if you have over $400 in net earnings from self-employment, which includes side jobs or other independent work, and obviously 400 is a lot lower than the amounts on these tables, right? If you have over $400 in net earnings from self-employment, then you need to file a tax return, right? And you're gonna owe self-employment tax on those net earnings from self-employment. And remember, net is the net, right? What you brought in versus and subtract all your business expenses if that's 400 or more. But realistically, even if you had a loss for the year or something, if you got a big 1099, the IRS is still going to come after you. They haven't really been going after folks very much the past few years because they shut down a bunch of those notices during COVID, but they're back now. They put out a little reminder to everybody at the beginning of the year saying, hey, we're back now. They're sending out those LT38 letters, et cetera, right? And that, if you haven't filed a return for a year in which you had a big 1099, the IRS basically has forever to catch you on that. They'll very likely file a substitute for a return or an SFR, as that's the abbreviated form. Okay, so let's go back to the question here, kind of taking into account what we learned, right? So the question here is about the little brother. He works selling pest control services as a 1099 person, right? A 1099 independent contractor. So unlike what his big brother is suspecting here, his threshold here is not the standard deduction for his filing status. It's $400 in net earnings from self-employment. So medical mean dealer, if your little brother netted over $400 from selling that pest control service, right, he would have a filing requirement, okay? Moreover, medical mean dealer, and let me make the question big again. Moreover, medical mean dealer, and now I'm talking about your second paragraph here, where you say that your little brother worked as a W-2 employee briefly for a month or two after he sold the pest control stuff, and he had his taxes withheld automatically. That would probably indicate to me that he probably has a filing requirement to file his taxes, right? If he had federal income tax withholding taken out. But even if not, let's say he didn't have the 1099 work, right? Let's say he had a W-2 job, right, that got taxes taken out, and he didn't have a filing requirement because his income was too low under the threshold amounts for his filing status based on the table I just showed you. He should still file a tax return because he would get those tax withholdings back as a refund, right? Not required to file. He wouldn't have any taxable income, right? Let's say he made $10,000, right? And the standard deduction wipes all that out. He owes no tax, right, from his W-2 job. And let's assume that W-2 job is the only thing he has. He should still file and get those federal income tax withholdings back as a refund, right? Now, up until this point, I've only talked about federal filing requirements. Your state may have different rules for who needs to file, and generally they do. Generally, states have a much lower threshold for when you need to file a tax return. I'm not going to go through every state in this video, but let's use some big states as an example. Let's use the state where I live, California. So here's California's tables here. A little more complicated than kind of the federal tables, to be honest. So basically, this is saying if your income is more than the amount shown, you need to file a tax return. Okay, so if you are single or head of household in California and you're under 65 and you have no dependents, you have to file a California tax return if your income is more than 21,561. This figure if you have one dependent, this figure if you have two or more dependents, different rules if you're 65 or older, right, and so on and so forth. These are all the tables here. Let's do another state. Let's do I don't know, what's another big state? New York. Obviously, Texas and Florida are the next two states after California by population, but those states do not impose a personal income tax. So after California, the next largest state that imposes a personal income tax is the state of New York. And here's what New York has to say. If you live in New York, okay, if you are a New York resident, you must file a resident income tax return if you meet any of the following conditions, right? So you have to file a federal return. And that's true for California as well. You did not have to, or if you did not have to file a federal return, but your federal adjusted gross income plus New York additions was more than 4,000, right? So that's kind of the threshold here for New York. It's a lot lower than California, right? Because in California, even if you didn't have to file a federal return, right, it had that table, and those amounts were much higher than $4,000 like New York, right? It says $3,100 if you were single and can be claimed as a dependent on their taxpayer's federal return. Of course, if you want to claim a refund, which I talked about before in the example, if you don't have even if you don't have a filing requirement, but you still got taxes taken out, you probably still want to file and get that money back. You want to claim any refundable or carryover credits available. Okay, so that's the gist of it, folks. Those are the federal rules. Those are a couple states. You can see the states had pretty different rules between California and New York. I'm not going to go through every state's website here, webpage here, but I would encourage you to, in your state, just Google, like, do I need to file a tax return in Oklahoma, right? And look for the official Oklahoma website, which will have the most up-to-date information for you. So, all right, folks, thanks so much for watching. I have some other videos related to tax return preparation here on the left-hand side of the screen. If you need help filing your back tax returns, you've gotten behind your tax filing, or if you owe at least $10,000 in tax debt to the IRS or to your states or to your locality, reach out to us at Choice Tax Relief. You can visit the webpage right here, fill out the form, or give us a call, 866-8000-TAX. That's 866-8000-829. Thanks so much for watching, everybody. See you in the next video. Bye-bye.